Managing Director and CEO at PNB Housing Finance. He took over charge exactly a month ago. Mr. Kousgi, it's a pleasure having you with us here in your new avatar. Good morning, Prashant this side, and congratulations from all of us here. So straight off the bat, Mr. Kousgi, you've kind of upgraded, what the company, what PNB Housing as a business will be able to do in terms of loan growth, in terms of dispersal growth, spreads. With you being there a month now, I mean, how confident are you that some of this is going to be achievable? And if you can also lay out slightly kind of longer term, 2-3 year kind of plan. PNB Housing is also a company which has got significant private equity investors, so they would have also kind of spoken with you. And how's the vision looking at PNB Housing with the new management in place?
Good morning. I think it's exactly a month that I joined this great institution, PNB Housing. I think going forward, our focus is largely going to be on affordable. So today we are about, let's say, 90% on prime, and the rest is affordable. So going forward, incrementally, we would do affordable 25%, and over a period of time, we will try and increase that share. So in terms of guidance, I think I had mentioned in the investor call as well, we will be looking at about 40% growth on disbursement over last year. And in terms of book growth, it will be close to maybe close to 10%, maybe 8% or 7%, or maybe even 9%. I think from next year onwards, we'll be able to grow disbursement in the range of 22 to 25% for next few years. And in terms of book growth from next year, we'll be in the range of 17 to 18%. I think this is the guidance. We see that market is quite robust. And in PNB, the slight change in strategy will be pretty aggressive on affordable. Just to give you some data point, I think before end of this financial year, we will have 80 odd exclusive affordable branches, which would focus on a ticket size of about 15 to 16 lakhs kind of a segment. I think that's our focus. In terms of vision, we would very soon want to hit 1 lakh crore book.
Okay, so this 24 to 24% growth that you've seen in the retail business, Mr. Kousgi, I want to just talk a little bit about that. By the way, congratulations, you've completed 1 month and hopefully you have a long journey ahead. Within the retail book, there's a sharp drop in business with self-employed individuals. Is that a strategy that the company has undertaken, to reduce the exposure there because of perhaps higher NPAs? Just give us a little bit of understanding of how this is playing out, and is this just an aberration?
No, I think it is more by design, even though we've just started that. I think going forward, our salaried share would go up in the mix. Self-employed would come down, because it's a well-known fact that self-employed would have a slightly higher delinquency compared to salaried. So our focus is going to be on salaried. Having said that, we will also continue doing SNP business. In terms of mix, there'll be a slight change. So probably I would put a number going forward, let's say 70 and 30, or maybe 65 and 35. So we want to have salaried between 65 to 70%, and the rest would be SCP and SCNP. In terms of prime and affordable, I've given. In terms of margins, I think for next few quarters, spread would be threshold of 2.2 and NIM would be 3.2. As of now, you will see it's on the higher side. There'll be a lot of fluctuations, but I think on a steady state business, long term, we would protect 2.2 and 3.2.
Okay. Hi, Mr. Kousgi, and congratulations on your new role. What about credit cost? Could you give us a guidance out there?
Our focus is now largely on retail, and we know that we have to bring down our delinquency. We are working on retail very, very aggressively, both in terms of growth, when we talk about growth on disbursements, on book, and we also want to bring down delinquency. In terms of credit cost, it will be in the level what we saw in H1. H1 was about 0.92%, so you will see slightly higher. I think very shortly this will get normalized. On the corporate side, we have a book of 5,700 crores. There, the focus now is to bring down delinquency. So we are not keen to start the business. We will take about few time. We'll take about 3 to 4 quarters. We'll bring down delinquency, and then we will restart. So our focus also would be there on corporate, But going forward, probably in a different format altogether, lower ticket size will be present more on a strategic level. But yes, that would happen once we bring down delinquency in the corporate book.
Any fundraise, Mr. Kousgi? Would Carlyle increase their stake? I know it's still early days, but anything you can tell us at this stage?
I won't be able to comment on that. I think as a company, we focus on operations. We try to
For the company, any
perform
fundraise?
better quarter after quarter. In terms of various stakeholders, I think it is their call and decision.
Right.
I would not be able to comment on that.
Any fundraise? Anything? Any plans to raise any funds with these higher growth targets?
Yeah, we are planning for growth capital. So we are planning for rights issue.